Hello and welcome to Weekend Investing Daily Bytes. We have a very special offer for our strategy MI20. Use a special 20 code to subscribe to this, and this is valid only for this week. So this is a very short time frame offer, especially for those who want to start their journeys. Coming back to the strategies, to the Weekend Investing Daily Bytes, we are shooting episode 318, and we'll showcase why momentum investing is a must have in your portfolio. But first, a look at the markets. RBI rates have gone up by 35 basis points more. Market was probably expecting that they'll do quarter percent or at least talk about ending of this upcycle in the rates, but they did not do so. And that's the reaction that the market gave of uh, you know the bottom falling out of the market for the day. Uh, Nifty down 0.4%. The worst hit for real estate. Obviously, with interest rates going up, real estate will be hit the most. Energy, metals, commodities, IT, auto, pharma stocks. And the only safe haven seem to be FMCG and some PSU banks continuing their crazy run, and the consumption stocks up 0.1%. Overall, but the breadth was pretty bad. You can see that besides Nifty Next 50 at plus 0.2%, you had most of the indices losing about half a percent on the for the day. And the weekend investing strategy is also losing between 0 and 0.8% for most of them, and only two strategies gaining at 1.15 and 0.32%. Heat map for the day, you can see only levers up, ITC up, Asian Paints up, and BPCL up. I think that's the only gains that you had primarily, and many banks down, cement, steel stocks down, IT stocks down, power stocks down, pharma stocks down. So the breadth was pretty poor. Top gainers in CNX 500 universe, fertilizer and chemical plus 10%, Hykel up 10%, Gujarat Ambuja exports up 9%, Central Bank and NLC India up 6 and 7%, losers Sobha down 5%, Rajesh Exports and Hudson Agro down 4%, Sterlite Technologies and Suzlon Energy also down 3.5 to 4%. These were the top gainers and losers. So this uh, insight is a bit unrelated to the markets, but nevertheless, everything is related to the market if you think about it. So I see a lot of people wanting to be somebody else, maybe envying other traders, maybe envying your friend or somebody who's got a great portfolio going. But if you look deeper, every person has a lot of challenges in their life, and you don't know what journey that they have come through to get to where they are. So every person will have a unique journey, every person will have a unique life, and you don't want to be anybody else basically. So once you can absorb this, at least half of your worries about my portfolio is not doing better than XYZ, that will be gone. Because at the end of the day there is no point of doing that, and this is a behavioral part of investing. So it is related to the market to that extent, that as long as you are positively inclined towards improving your skill, improving your investing, improving your process, you don't really care about what anybody else is doing. So coming back to the topic of the day, must have in your portfolio is momentum investing. And while I'm more or less 100% invested in momentum investing in my equity portion of my asset allocation, not everybody can be convinced so easily about momentum investing. It is a strategy that is simple but not easy, and it is unconventional, it is counterintuitive, and it takes time to appreciate what momentum investing can really do. So if you've not tasted momentum investing, I would say, start with 10%, start with 20%, but gradually see what kind of ease of operation you can have with this kind of a setup, because the rules are crystal clear. And I'll show you, like in this example, for instance, a lot of traders were talking on Twitter about Web of Global recently, and I realized that I had also picked this stock, so I went back and looked at my records, And in June 2020, MI25 had picked Web of Global at somewhere near 250 odd. And it just shot up like a rocket after that. And we kept holding like we do in momentum investing. We don't let our winners get out easily. Uh, Stock went up to 1100 or 10,000 or 1050, somewhere near that, and started to drop. We exited in July 21, made 228%. Never looked back. Never looked back. The stock further fell another 60-70%. So what did we achieve? We achieved a very quick return on our money. We achieved a good exit, which did not give us pain after the exit. Yeah, we may have lost some ground from the top, that's fine. We got the opportunity to use that capital elsewhere. Extremely important point that the more productively you can deploy your capital, even if your returns from each trade are not so high, overall it will make an impact. So the clarity, basically, the clarity of entry, exit, sizing, that makes the momentum strategy must have in your portfolio because you're not stuck with a subjective decision making which often holds you back at every step, at entry also, at exit also, at portfolio sizing also. So the four cardinal questions: what to buy, when to buy, how much to buy, when to sell, should be absolutely clear. No doubt about it. And never be in a dilemma, about these questions. Winners are allowed to run, losers are cut early. You believe in BBC, Bhav Bhagwan Che. You don't have to deal with external factors. You don't have to keep running after what the economy is going to do, what interest rates are going to do, what the US market is going to do, how FIIs are going to behave, how sectors are shifting. Momentum will always get you into the strongest sectors automatically. You'll get out of weaker sectors, you get into stronger sectors, you'll get out of weaker stocks, get into stronger stocks, so on and so forth. So complete peace of mind and and basically it's almost like running on autopilot. Now, also there are some myths about momentum. So one of the myths is that it's sure like short-term trading. It's not investing. So the fact is that we are on an average holding about 3 to 6 months on each stock, and many times we even hold a stock for more than a year. So we've done that in for many stocks which keep running. So you keep holding them till you get an exit. Another myth is that the edge will go away if more people are doing it. That's sort of also humbug because uh, there have been empirical studies over last 200 years of data, mainly on US markets. And momentum is still remains the best performing factor investing style uh, out of all other strategies. And whatever amount of money that has been thrown at momentum in terms of style, it has still remained in the top position. The third myth is it is too simple. How can it be true? How could you be beating the benchmark with such simplicity in your strategies? So the fact is that yes, it is simple, but it is not easy. It's counterintuitive, very, very counterintuitive. And buying high and selling higher does not come naturally to any person. Just like it's very simple to think that we can go out and do a 60-minute walk every day and our health will be fine. But how many times are we able to do that? So what's simple may not be easy to do, and that's the fact around that. So this is what I had for you in today's daily bite. Thank you so much for your time, and I hope you are continuing to share these videos with your friends and family. And as you can see, I'm recording this from another location, but I really wanted the daily bite not to have any breaks. So let's keep going, and I'll see you in another video. Bye.